What's up, investors? We're back again. This time we're going to take a look at WIX, ticker symbol WIX. So let's first just take a look at the stock chart. The stock has been on a steady rise since IPOing several years ago, but we notice here the stock has really gone parabolic after making a really nice low here back in March, like most stocks did. Looks like around the $77 range, and it's peaked up all the way to $231. So we're close to this 52-week high. So the first thing I see here is a parabolic move. Doesn't make me necessarily want to jump in and buy shares, but anytime you have this kind of parabolic move, you might have a nice little pullback that might create some buying opportunities, and we'll examine WIX and see if it's a stock that we'd like to buy. So market cap sitting right at around $11 billion. Forward PE is massive. This is a company that is reinvesting a lot of its profits. It's not hugely traded. Honestly, this company isn't really actively traded. So you've got some relatively thin volume compared to some of the other stocks that we've taken a look at. Now, first thing I want to jump into is they just reported a quarter not too long ago. They had a blowout quarter. They actually kind of raised revenue guidance and raised kind of their outlook on the year because they saw an acceleration of people and businesses setting up websites on Wix. And so this is what they were portraying for a Q2 outlook. We'll look at the most recent quarter here. What they did 215 in revenue, and they did 248 in collections. And look, so they're actually seeing another acceleration onto Q2. At least this is what they're forecasting here. Now, collections for Wix is like they bill customers in advance, so maybe for a year. And so they take in this money, but they can't technically recognize that as revenue until the month or that period hits, because they haven't technically delivered the service technically for the customer. So that's why collections is not a bad way to kind of look at this company. And if you times this by 4, this company will tick up over $1 billion in revenue for the first time. And that's actually really impressive growth here at 28 to 30%. Now, moving into the most recent quarter, we have 3 months ended for March 31st here. We have it back in 2019 and we have it 2020 here. We've got revenue here, came in at 175 last year, ticked all the way up to about 216 this year. So that's solid revenue growth. And boy, this is a really high margin business. When you take a look at the creative solutions here, they only spent $35 million to make $177 million in revenue. So the more people they can get signing up for Wix and creating websites and starting to pay them, that's massive profit margins there. Now, business solutions, not a very high margin business, but it does have some margin there, and it obviously contributes to the creative subscriptions as well. So we get a gross profit off of 215, call it 216. You got 154 million. That's up from 135 million the period before. Now, this company is not making money because when you take in consideration research and development, sales and marketing, and general administrative, although this general administrative looks to be leveling out, in my opinion. Research and development, I don't mind them investing there. Selling and marketing is ticking up nicely, but it's not out of control. Went from 162 to 192. That's not that bad when you consider they added a decent amount of revenue to the top line here. And so, look, they went from 27 million, call it 28 million operating loss in the last period, and now we ticked up to 39 million loss, and here it is from a net loss perspective. Another thing you want to keep in mind on this company is they are diluting you every quarter, every period here. They had 49 million shares outstanding in the previous period. Now they're up to almost 52 million. That's a cool 3 million shares added to the float. Now, the other thing I want to kind of take a look at is the balance sheet. So we saw that they lost about $40 million. Do they have the cash on hand to handle those kind of losses? Yes, they do. Now, so they have cash and cash equivalents here, short-term deposit, restricted cash, marketable securities. They've also got marketable securities down here in long-term assets. That's $210 million. You've got 169 of them here. You've got 191. I don't want to do the math, but this is hundreds and hundreds of millions of dollars in cash. They can easily support report a $40 million net loss per quarter for an extended period of time. I don't want to say a very long period of time because at some point, the rubber hits the road. They do have a very, very small long-term loan here at 1.2 million. I'm surprised that it's that small. But it shows that they might have the ability to borrow more money in the future, which they probably will have to if they want to continue to push things forward. Now, last thing I want to look at on the financial side, and then I'm going to compare this stock to Shopify and GoDaddy, which I think are two of its closest comparisons in the marketplace. But first, this is interesting. I want to show you guys this here first. So 3 months ended. So it shows you the number of registered users. So this is people that have logged on to Wix.com and set up a website. It went from 148 million, this is in thousands, and it ticked up to 172 million. Now, number of premium, these are people that whipped out their credit card and actually paid Wix. Look how small this is. So they went from about 4 million up to about 4.6. So they added about 500,000 paying members in about a year here. Now, two ways to look at this. Glass half full is they have over 170 million customers that have not paid them, and these people could eventually turn into paying customers. Now, the glass half empty way to look at this is out of 170 million people that have signed up for Wix, only 4 million and change have decided to actually pay. So a lot of people sign up for Wix and they don't exactly want to pay for it, or they don't feel like they need to pay for it. So there's two ways to kind of look at that. Now I want to jump into a chart that I made for you guys. We're comparing stocks here. Now, just because I have a comparison up here doesn't mean this is how you analyze and buy stocks, but I did want to put this up here to kind of give us a compare and contrast some of this stuff. So Shopify obviously has the biggest market cap out of all these companies, but they also have the fastest and highest revenue growth rate going forward at about 39%. So better believe that if that growth rate starts to tick down into the mid 20s or lower, Shopify's valuation is going to get chopped very, very quickly because, as you notice, they actually have the lowest gross margin compared to Wix and GoDaddy. Wix actually has the most impressive gross margin at over 73%. You gotta love that. And now if they can tick up that revenue growth rate, I think this is a company that can continue to push that valuation, which we see is at about $11 billion, which is, small in comparison to Shopify that's sitting at $88 billion. Now, GoDaddy is a company I added here, again, not necessarily to compare, but Shopify and Wix, in my opinion, will turn into GoDaddy if they don't vertically integrate their software and don't vertically integrate more business models and revenue streams into the company. What do I mean by vertically integrate? And I think the easiest way for me to illustrate this is by taking a look at Amazon. Now, a lot of people come to leave comments on my feed here on YouTube and they say Shopify's the next Amazon, Shopify's the next Tesla, Wix is the next Amazon. People love to compare stocks to Amazon because Amazon has gone up and up and up. But what Amazon has done that Shopify and Wix and GoDaddy have not done is what I call, and most people call, vertical integration. So Amazon started with Amazon.com. Then what did they do? I believe they rolled out, and this might not be in the exact order, but they rolled out Amazon Prime, which is almost like a Costco membership and generates tons and tons of guaranteed cash flow into Amazon. Okay, it's almost like the subscription fees that Wix and Shopify collect. But what ended up happening is even more impressive. Amazon vertically integrated their cloud computing software service, Amazon Web Services. A lot of people don't really know this, but Amazon needed to build out huge amounts of processing power to keep Amazon.com afloat during Black Friday and peak traffic at times. And what they found was they had all this extra capacity during the rest of the year that they decided then to sell off into other businesses, which created Amazon Web Services. Now, I could keep going on here. They have Amazon Prime Video. They have Alexa. They have Amazon shipping services, which I think will overtake FedEx and UPS one day. Okay. Amazon and Shopify and Wix might end up having to use Amazon shipping at some point when that service starts to roll out. Amazon has grocery. They have video game stuff with Twitch. They have lots and lots of layers to their business, whereas Shopify and Wix are still, again, in the early stages, but they have massive, massive valuations in relation to profit. And so we'll see if they're able to add more to their business, because guess who did not add much more to their business over time is GoDaddy. GoDaddy was once the Wix and Shopify of its day. Some of you guys might not be old enough to remember that, but I am. GoDaddy was a hot commodity, not necessarily in the public markets, but it was a hot business, but it never really vertically integrated. And what you see is their growth rate trickled down to the low 10% range. Their gross margin is still pretty nice, but they've peaked out in that $3 billion worth of revenue because they just haven't been able to bolt on more businesses. And that often is the case with these high-flying stocks, is they start to run out of runway in terms of more growth, and that's when the valuation comes crashing down. Now, not necessarily saying that is what's going to happen to Wix.com, but let's go back and look at the stock chart. And what I would say is this is a stock I'd really like to pick back up into this 150 range. You see this 150 range, I think this stock went parabolic. I believe we'll probably get a sell-off here. You'll probably have a chance to grab this stock again in the 150s, because this 150 where it kind of peaked out here should provide some support on the way down. And, you know, what's that? 20, 30, 40% of a haircut off of this. And if you start shaving this valuation to, single digit billions of dollars, this is a company that will tick up over $1 billion in revenue. They've got really, really high gross margin. I still think they have quite a bit of runway to go in terms of growing their business. And it'll just be a matter of, can they vertically integrate more business models down the road? So like I said, they don't turn into the next GoDaddy. So again, would I like to buy Wix shares? For sure. Would I like to buy them at the peak of this range? Absolutely not. So I would keep an eye on this one, wait to see where it pulls back, maybe add some shares when it pulls back to this 140 range. I wouldn't be super aggressive, because if it breaks that level, you're going all the way down to probably under $100. And that's probably where you'd really, really like to add shares, because then you're getting it, call it a $5 to $6 billion valuation. Then you're only paying 4 or 5 times sales. I think you'd be getting a pretty good deal on Wix.com at that point. So there we go. If you've got a stock you'd like for me to cover here on the channel, leave me a comment below. I'd love to get to it as soon as I possibly can. Hit that subscribe button if you like what we're doing here, and that like button as well. Thanks for watching. Good luck with your investments.